more marginal mines are generating incredible cash flows. We sold back in 2022. It was a reasonably profitable mine at the time at sort of $1,700, $1,800 gold, but now at $3,000 gold, even a small low grade mine like that is going to be making a ton of cash flow. So
with the trade war expediting, now the question is whether or not global trade will be cut off to maybe only a fraction of the volume it was before. That means bad news for industrial metals, but maybe we're on a rebound. We'll find out. Tim Warman joins us today. He is the CEO and Director of Fuerte Metals. That's FMT on the TSXV. We'll be talking about copper, gold, and the global economy today. Welcome back, or welcome to the show, rather. Welcome to the show, Tim.
Thanks, David. Thanks for having me.
Let's talk about what's been going on right now with industrial metals and commodities, particularly with the hard metals. As you know, copper has had a huge decline, and I'll put a chart on the screen for the audience, a huge decline in the last week or so in light of escalating trade war tensions. Do you think this is the beginning of an industrial metals complex collapse?
No, I don't think so. I think, fundamentally, it doesn't do anything to impact the supply side of the equation. And I think that's a lot of what's driving it. We've got lower grades, less discoveries and things like that going forward. I think this is more of a short-term blip as this whole tariff thing works its way through and hopefully, touch wood, it'll get resolved in the next few months, and then I think we'll see the recovery of the base metal prices back up to much more realistic levels.
What is a realistic level for you? Let's just take copper, for example. So if you take a look at my screen, copper is currently trading at $4.2 a pound. Yeah, here we go. And it's been down about 20% in just a week and a half.
Yeah, I mean, if you look at it, it's kind of back to where it was in February of this year. So, we had a brief run up and then a quick drop. So I think longer term prices in the $5 a pound area are probably where we're headed. I think that's probably the decision price for a lot of new copper projects, given that the capex of some of these big new copper projects is in the several billions of dollars.
Yes.
And so, from our point of view, our projects are early stage enough, and we sit right in the middle of an established, fairly well advanced, copper to copper project that's owned by a major. I think we're not too concerned about short term fluctuations in the copper price right now.
When you said earlier that there are more fundamental supply issues that are still more prominent, what does that mean?
Yeah, I mean, I think if you look at the rate of discovery of new copper deposits, I think if you look at the grade of existing copper deposits and the grade of new copper deposits, you're seeing a pretty pronounced decline over the last sort of 20 or 30 years. I mean, the really big, easy to find copper deposits have all been found. There's, with very few exceptions, the ones that are being found tend to be lower grade. I remember in the 90s when I was starting my career, I was working in Zambia in the copper belt, and we looked at some of the old reports where they talked about low grade ore being anything less than 10% copper. I mean, I don't think there's a deposit left in the world that has 10% copper in it. So, yeah, it's that overall declining trend that's been going on for a long time. And that means that it's basically impacting supply as you chew through the existing copper inventories that are in the ground. Your next projects are going to be lower grade and therefore more expensive to mine.
Well, is there an economic incentive for new projects to come online? In other words, is there a real growing demand here that needs to be met such that projects need to be put online?
Yeah, I mean, I think again, I'm hopeful that all of these trade war and tariff noise is temporary, and that things will sort of work their way through to a more, I guess, saner outcome in the next sort of 6 months or so. But again, it's hard to predict anything these days with real certainty. But yeah, I think overall the demand for copper is in particular is going to grow as we get through electrification. I mean, I don't really need to get into that whole electrification argument. I think everybody understands it quite well. But I think I think overall, yeah, copper long term copper demand is going to keep rising.
Do you think China will still be the dominant driver of copper demand as it was in the 2000s, for example?
Yeah, I mean, I think so. That's where the bulk of the smelters are. And so, that tends to be what drives the demand for the concentrate, which is where, most of the metal comes from. So, yeah, I would expect so.
Okay. And what is the copper industry doing exactly to fill this demand supply gap?
Yeah, I mean, I think what they've been waiting on is, there are a few projects, like the one that we sit in the middle of that are owned by the majors. We sit surrounded by a joint venture between Teck and Newmont. It's a large deposit, has 20 billion pounds of copper, as well as 10 million ounces of gold in reserves. But they're going to wait until probably they see copper prices in that kind of $5 a pound range before, making a decision to commit the kind of multi-billion dollar capital that's going to be required to build a project like that. So I think generally people are pushing the projects along to the point where they can make that decision, but they won't make that decision until they see the price that they want they need to make those capital decisions.
Do you think there's going to be more M&A activity now at current copper prices at $4.2 an ounce or pound rather, simply because you're buying an exploration company for cheaper? Doesn't that make more sense?
Yeah, it's possible. I mean, we saw some M&A not that long ago with BHP and Lundin teaming up to buy Filo mining. It's a very big deposit, not that far from us. We're seeing investments in copper explorcos. Perfect example is one of our neighbors, ATEX, which is also a group where Pierre Lassonde and Trinity Capital are large shareholders. Agnico Eagle just invested something like $40 million into them, just within the last few months. And so, yeah, I think advanced projects like Filo, but also wanting to get a toehold into, earlier stage explorers with good potential projects.
Okay, before we talk about Forte Metals in more detail, let's talk about gold. Gold is rebounding on Tuesday, April 8th, as we're speaking, and it's rebounding alongside equities. And gold's been trading pretty much in tandem with risk assets over the last couple of days as Trump announced reciprocal tariffs. Equities sold off, and gold did as well. It's now back above $3,000. What do you think is the sentiment driving the gold price right now?
Yeah, it's funny. The trying to predict the gold price is is almost like trying to, predict the weather a year from now. It's interesting. I mean, obviously, it's a hedge against inflation. It's a hedge against risk. It's a sort of safe haven asset, I guess, that as it's always been, and it's kind of showing that it continues to have that function. Um, I think the little drop off you saw in the gold price over the last few days has really just been a kind of broad rush for liquidity. It's sort of sell everything kind of mentality. And I think you'll see the gold is seems to be holding some support nicely around $3,000 an ounce today. And I think longer term the trend for gold prices is pretty good. And particularly at these prices, gold producers are making, tremendous margins. I mean, kind of margins we haven't seen in probably 20 years, on the gold price. So
Does this surprise you that gold has not rallied even more, basically diverged from equities prices in light of escalating trade wars and geopolitical tensions? One would think that a safe haven asset would move in the opposite direction when stocks go down.
yeah, I think when those stocks came down like they did, I think it was, like I said, it was just a rush for liquidity, like sell
Yeah,
everything. It didn't matter what it was. So,
sure.
yeah, I think that's a short-term correction, and I think you'll see gold prices continue their strength over the next, sort of few months to years.
So you mentioned that $5 a pound makes sense for copper. What makes sense for gold deposits and even producers?
Yeah, I think, well, I mean, producers are loving these prices,
Yeah.
$3,000 an ounce. They're making, sort of record free cash flows. And you're seeing that right across the space. I mean, even the sort of more marginal mines are generating incredible cash flows. I was the CEO of a company called Fiore Gold, and we sold that. I was a producer. We sold back in 2022. And, I look at that mine. It was a reasonably, profitable mine at the time at
Mhm.
sort of 1,700, $1,800 gold. But, now at $3,000 gold, even a small, low grade mine like that is going to be making a ton of cash flow. So, yeah, I think these prices are excellent for
Mhm.
producers.
I'm curious because you've been a geologist, you've been working in the space for decades. The all-in sustaining cost over time has gone up, as you know, and that's no surprise. That's just part of inflation. But which aspect of the all-in sustaining cost, which component do you think moved the most in the last couple of years and was the biggest driver of this higher cost overall?
Yeah, it kind of depends on the type of mine. For some mines it's been fuel, so diesel prices primarily, particularly if those mines have to generate their own power on site, and aren't connected to a national grid. Um, but really, it's been labor. Labor is almost always the biggest component of cost for any mine, and really just labor costs have been driving it up. So.
Let's talk about Forte Metals now. You are a company with projects based in South America. Tell us a little bit about just an overview of the deposits you have, the grade of the deposits, the types of metals you're involved with.
Yeah, it's an interesting company. So we have two main projects. One is a copper project in Chile. It's called Placeton on Caballo Muerto. It's a big copper porphyry target. I would love to tell you about grades and things like that, but it has never been drilled. It's a very early stage project.
Okay.
And the really interesting thing about it is that it's completely surrounded by a large, well-advanced copper porphyry project called Nueva Union. And Nueva Union is a joint venture between Teck and Newmont that's currently going through a revised feasibility study. It's got reserves established. It's got 20 billion pounds of copper and 10 million ounces of gold in reserves. And we sit literally right in between the two parts of that deposit. And so the thing we're focused on in Chile is really talking to our neighbors. We have a major investor in the company currently, which is Agnico Eagle, and Agnico Eagle's just made a major investment into one of our sister companies just down the road from us, a copper explorer, early stage copper explorer. So we're talking to them. We're talking to Newmont. We're talking to Teck, who are the two JV partners on the Nueva Union ground surrounding us. Really, what we want to do there is partner with a larger company to explore those properties, to put the first drill holes into them. We've done the surface work. We've defined these really great targets based on surface geochemistry and geophysics and all the key indicators that you've got a copper deposit there. But now we have to get onto the stage of drilling them, and
Mhm.
that's expensive. We're up at 3,500 meters in the Andes, and it's an expensive kind of target to drill. So we're looking to partner with a larger partner with more resources and move that project ahead. So that's our Chilean project,
Yeah.
copper focused. And then in Mexico, in the state of Chihuahua, we've got what's primarily a precious metals project called Christina. And Christina is much more advanced than our Chilean project, where Christina, we're working on that on our own. It's a 100% owned project. We currently have a resource of about three-quarters of a million ounces of indicated and three-quarters of a million ounces of inferred. So at about 1.3 grams per ton gold equivalent. And they're polymetallic deposits. So they have gold, they have silver, they have some zinc, and even a little bit of lead and copper in them. And all of that adds together to make up, a pretty decent grade combined metal deposit. What we're doing on that project right now is a major drill campaign. We're doing about 20,000 meters of diamond drilling on it, and we're looking to grow the resource, but also we're looking to increase the grade of the resource. We think that deposit is going to be a high grade underground mine going forward. We're seeing lots of drill intercepts with grades of 7, 8, 9, 10 gram per ton gold equivalent over some pretty substantial thicknesses. And you can go to our disclosure on our website and have a look at some of those in more detail. But it looks like it's going to be a really nice multi-million ounce underground mine in an established mining area in Mexico, surrounded by a number of other similar kind of higher grade underground gold and silver mines.
Well, Tim, the jurisdiction of South America is rich in veins and ores. Tell us about the geological advantages of operating there.
I mean, if you look at Chile, obviously that's copper country. It's one of the largest copper producing countries in the world, if not the largest. And we're surrounded by, major copper deposits there. So And Chile obviously an established mining jurisdiction. There's good sets of regulations. The regulators and the politicians and the locals understand mining. You don't have to
Yeah.
explain to them what a mine is or anything like that. So it's really just a perfect setup for wanting to operate in Mexico. Again, similar situation. It's a mining country, well-established mining country. It's politically stable. We've got good infrastructure in the area. We've got good access to water. We've got access to power. We've got good relations with the local communities and agreements in place for those. And again, a mining culture. Lots of existing mines around us. You don't have to explain to anybody what a mine is when you're working there.
Mhm.
And with the new government, a lot more support for mining, than we might have seen with the previous administration in Mexico. And beyond those two jurisdictions, we're also looking to expand the company, as well. We're always looking for new projects and being fairly aggressive with that search.
What are some of the geopolitical risks that you have to navigate operating in South America?
Yeah, honestly, they're no different than anywhere else. In Chile, there isn't really a lot of risk there. It's a well-established mining jurisdiction. We've seen some changes to the mining regulations. We've seen a little bit of increased cost in terms of what it costs to hold on to, a mining concession there. The sort of annual taxes and things like that. There's been some discussion about increase in state royalties on those projects, but again, that hasn't really been firmed up yet. So yeah, I mean, Mexico, or sorry, in Chile rather, it's about as good a jurisdiction as you'd want to be in. In Mexico, obviously, you have to be conscious of the security situation down there. You probably see on the news the cartel activity in Mexico, and we're certainly aware of that in general. We sort of keep our heads down and don't get involved, and people generally leave us alone. We're not in the cities. We're out in a fairly rural area where there aren't a lot of people around, and overall, it's been pretty reasonable. We sort of get left alone to do our thing,
Yeah.
and haven't really seen any major issues so far.
Well, this just came in from Chile. Chile's Codelco state-owned copper producers boosted production in the first 3 months of 2025. Was still bullish about long-term prospects for global demand despite an escalating trade war between the U.S. and China. Now, yeah, let's talk about how tariffs specifically will impact uh, mining production and whether or not operations would change in light of more tariffs that would presumably impede the export of trade, the export of metals across the borders.
Yeah, I mean, obviously, you're not going to be, U.S. tariffs don't really have much impact on Chilean copper producers selling concentrate to Chinese smelters, so
Hmm.
that's not really an issue.
I see.
Directly, obviously, once you're importing finished copper into the U.S., tariffs are going to have an issue there. There is, some copper production in the United States, but I don't believe that the U.S. is self-sufficient in copper production. So they're always going to have to import some copper from there. And they import copper from Canada as well. So, it's obviously, look, tariffs are obviously an impediment to trade in that regard. But as you see, Codelco's trying to improve or increase production. So, I'm still confident again that this is a short-term blip on a much longer-term trend.
Well, do you think even in the short term, producers will be incentivized to start exporting to other countries that are not the U.S., basically reduce trade to the U.S., which could actually create a longer term problem for the U.S. if these new trading dynamics are not reversed in due course, right? Because
Yeah.
then you're just exacerbating the supply chain issue or supply crunch issue in the U.S.
Yeah, yeah, it's entirely possible. It's definitely going to, be a short-term impediment. But again, whether it has longer-term impacts, I think that remains to be seen. But I would certainly hope not.
Okay. So what's the next milestone for Forte Metals that we need to be looking out for?
Yeah. So the next milestone is, one of the things that one of the reasons we put this company together in the format that it's in now is because it takes a management team that's had a bunch of successes in the past. I think I've sold three companies now, where we've done very well by our shareholders and really married that management team. Yeah, myself and my partner, Charlie Roncos, who's an ex Goldcorp major gold producer. We've married that with some really, really strong financial backers, specifically a guy named Pierre Lassonde. For those of you who know the mining industry, Pierre's a billionaire mining investor and founder of a number of companies, and as well as Agnico Eagle, a major producer. That's one of our major shareholders. And we're putting that financial backing together with a management team that's been successful in the past, and really looking to grow the company and add new projects, add bigger projects, add more advanced projects. Hopefully, move towards a producer status where we can start benefiting from those high metal prices and particularly high gold prices. So that's really the goal right now. Is as we work on our existing projects, there'll be news flow coming out of those. But going forward, we're really looking to grow this in a much more substantial way.
Okay, well, excellent. Tell us a little bit more about the management team, starting with yourself, Tim. I mentioned earlier in the interview that you are a geologist by background and you've been in the field for a number of decades now. So walk us through your background.
Yeah, I mean, I'm a geologist. I've worked all over the world in Latin America and Africa and in Europe, and I've been involved. I've been really fortunate in my career to be involved with several really interesting and successful companies. The first one that people might have heard of if they know the mining industry was called Aurelian Resources. It went from a 60-cent stock to selling the company for $1.2 billion back in 2008. We made a very large discovery in Ecuador, a large gold discovery that's now one of the most profitable gold mines in the world. It's run by Lundin Gold. And then I was involved with another company on the board called Continental Gold. Continental Gold, again, a large gold discovery and eventually a producing mine in Colombia that was sold to a Chinese producer. And then, Dalradian Resources, another company with a large gold project in, of all places, Northern Ireland. It's not typically thought of as a mining jurisdiction, but it was taken private several years ago by Orion. And then most recently, a company called Fiore Gold. As I said, we're a producing operator in Nevada. We bought an old bankrupt mine for $5 million in 2017. And 5 years later, we sold the company for $170 million after turning the operation around and producing free cash flow. And so it's been I've been quite fortunate to be involved with a lot of really exciting projects that have made money for investors, which is kind of the name of the game.
Hmm.
And then my partner, Charlie Roncos, he's again, a very experienced geologist. He was the executive vice president of exploration for Goldcorp, one of the largest gold companies in the world, eventually acquired by Newmont. But again, an extremely experienced geologist. And really, that's the company. The two of us are, small management team, low overheads, and focused on adding value.
Excellent. Well, Tim, congratulations on your success so far, and we'll look forward to the next update. Where can we follow you and your company for now?
Yeah, so our website, fuertemetals.com. I'm on Twitter for those of you who are still on Twitter, and yeah, we try to put news out fairly regularly on the company, on our exploration results and other developments. So yeah, but fuertemetals.com is a good place to start.
Okay, and actually, before we go, can you name maybe a few other major shareholders, institutional or otherwise?
Yeah, I mean, if you're in the mining industry, you might know some of the names, Merck and Ixios and
Mm,
Delbrook and Trinity Capital is obviously a major shareholder. But it's a fairly tightly held company. We only have 60 million shares outstanding,
yeah.
and so we have a sort of a few but very supportive shareholders.
What percentage of the float roughly would be available for retail?
There's probably less than 20% of the float out there currently right now. So,
Excellent. Thank you very much, Tim. We'll follow up next time.
all right. Thanks, David.